brings us to our second point, which is, right, so what are the challenges and opportunities going forward? What are the strategy solutions to attract even more? Again, there's potential for growth. And maybe I'll start with you, Jalal, because you've been in the forefront of building
so
this.
I think when we look at the challenges, practical challenges, there's a few different parts of it. So the biggest one we've faced as a large local custodian and investment bank is educating the lender community locally. So obviously, in a fully developed market, you'll have international lenders and borrowers and local lenders and borrowers, but we also realize at this stage, it's going to be a natural supply and demand. And the natural supply is probably going to be local lenders, and the natural demand is probably going to be foreign borrowers. So for us, educating the local lenders has been the biggest challenge, conditioning them that, any incremental return you can generate on a stock loan portfolio is good. Many people want to negotiate, prices in the beginning. And instead we're trying to condition them that we have a fiduciary responsibility to get you the best possible price. So, you benefit from having more assets in those lending pools. And then on the borrower side, I would say there's been some challenges from not having a clean netting opinion. A lot of borrowers still see this as a immediate red flag or hurdle that they're not willing to work around. But I think what's happened in the past year is that you've seen certain counterparties willing to take an RWA impact to be active and to be first in the market and getting the benefit of that business. And that's sort of starting to get people to shift to say, okay, well, let's try to get this running, even if we have that hurdle.
That remains a challenge going forward.
It remains a challenge. And I think there's a lot of work that's being done with ISLA, with the CMA, with different regulatory bodies in Saudi to clear that challenge. But it's still there, and it will still be a challenge in the market becoming more efficient. And then maybe on the final side, from the lender's perspective, Sharia compliance is critical. In Saudi, a majority of investors, if not all, will prefer a Sharia compliant transaction structure. So having that as something that we can offer, it's something we've gotten cleared with our Sharia board, but now going through the documentation process and making sure that it flows properly in our systems is the next step. But we think that will also open up a lot more on the supply side. On the demand side, I think the other key factor is you're seeing long-short funds coming to the market. So those are something that didn't exist a year or two ago in Saudi, and now they're starting to exist, and they need to have physical borrow. And I think that the growth in that sector is going to continue driving demand.
Andrew, do you agree? You mentioned Asia earlier, so let's widen this up and see.
Yeah, I would. And I think that Asia is another good example. So when you've got a fragmented region and you're looking to grow, the challenges are, and Jalal actually mentioned them at the very start as well, resources that you need to put to the region or to put into the region to develop it. So that is a challenge because banks now, global banks, domestic banks, we're all challenged from a resource perspective. There's not an abundance of resources available. So therefore, how you focus on these new regulations that you're learning and you're ensuring that you grow in the right way, how you ensure that you mitigate any risks, and how, legal is a good example. So to get a view on the Sharia impact on the legal documentation that has to go into place for a transaction, as well as how you make sure that you are abiding by the regulations locally, you need to invest into a legal opinion on that. Most international participants or foreign participants won't have a team locally that are experts in that, so that's then resource expended on that point, as well as the infrastructure. So as just a small example, in Saudi you have to connect to the EIDA, and to do so, that requires more investment as well. So the challenges from a sort of global agent lender perspective are how we dedicate our resources to match off the opportunity, which obviously we said is high already, as well as what our clients want, but we do it in the right way so we don't fall foul of any regulations or upset a market by doing something that you didn't mean to or intended to do. And that is another challenge, is there is an unforeseen with this. When you have a new market, some of it is exploring things that haven't happened yet. You haven't seen the market react to say a big fail in the market that hasn't happened yet. So things like that are the challenges.
Are you seeing this across fixed income, equities?
I think interesting point that Andrew made around the resource, because when you're going into a new market, and you probably get this as the head of the business, right? People come to you asking for a resource, but then you're asked to substantiate what the opportunity is. you're kind of in chicken and egg, because it's hard as a salesperson going out there to try and canvass the market. You always need the product to be able to then go and sell it. But if the business then needs the business case to be able to substantiate the investment, you kind of have this sort of a loop. So I think to a certain degree, I think you might have used these exact words, you need to take a leap of faith into the market. If you feel that the market is, or this particular opportunity is one worth pursuing, I think the banks, the agent lenders, or whoever wants to play a part on this, the infrastructure of the market, needs to kind of put their money down today in the hope of the kind of the gains in the future.
Sarah, are you feeling this? Because you're on the other side. Are you feeling this, people knocking on your door, and you're feeling frustration, or are you feeling
No,
joy and
definitely.
happiness?
So I think the demand in Saudi is very high. We keep getting so many requests on the securities lending side. I think even the Kingdom of Saudi Arabia, as I mentioned before, is ready, and the framework is there, has been launched by the CMA, by the AIDA back in 2017. So definitely, yes, there is a high demand.
Even there was a little lag before it actually pushed off. You need solutions, Elie, correct?
Definitely, in fact. And to come back to the challenges, yes, for the SBL market, in fact, it needs, like, one of the challenges is the expansion and the diversification of the supply, right? So if you take the example of the Saudi market, most of the assets are owned locally. And as any growth, it needs to be driven locally as well before, and to encourage foreign investors to enter into this market. Jalal mentioned the education. Yes, definitely raising awareness and education among local participants to encourage them to participate, to encourage the foreign investor. This is one. Second thing, this is something that we are trying to do within HSBC, and we are well positioned because we have good network with local and international participants, with mid-size and large financial institution. We are capable of bringing additional supply, which is diversified, more stable, and not only concentrated on the index-linked shares, which are the most liquid. At the opposite, in fact, even some supply on lower capped shares. And we believe if the growth is implemented in a smooth way, it will continue. It will continue like this.
Right, but all this happens because people like Broadridge actually take that leap of faith, anticipate. So where are we going?
So using Andrew's leap of faith, like I always think of it as forward revenue. Like we're having to do something today to access revenue probably 18, 24 months from now. But if we don't do it, we'll never get to it. So within the GCC countries, we've seen a large amount of requests, which we believe will turn into forward revenue. So we are fully behind what we now need to do. The challenges actually brings me opportunities. So where we've got a challenge around educating clients and onboarding them, there's also not just educating your clients, but within some new firms who want to start to do securities lending, they need education as well as to how does the market structure work. That can come from ISLA, but it can also come from vendors who deal in this space already, have quite a lot of maturity and knowledge. So we found opportunity there. The thing that's been really positive to see, going back to something that Andrew said around fragmentation in Asia, we see much less fragmentation in the GCC countries. There's definitely a lessons learned and continual tweaking and improvements. So that's helping us out as well, because we have a standard way of doing things, or we'll get to a standard way of doing things. The last part is integration. To integrate, I think Andrew, you said it as well, around connecting them into EDA. There are multiple countries within GCC which will have different technology requirements around integration. For us to provide those as service components we can sell each time is a really good opportunity for us, but also for the market to have more standardization. We're also probably seeing, you mentioned repo a couple of times. Repo is an opportunity space that's the revenue further forward for us as well. We're being asked a little bit now about repo within in Saudi to begin with, but we see it as being another forward opportunity. So that's where we just have to build the infrastructure.
Just a point on repo. I mean, repo is and repo and fixed income probably is a I don't feel, as a repo person, that we're quite at that stage of the ball rolling. Obviously I deal with absolute collateral and then the other parts. I found that sort of waiting on Saudi Arabia was I wouldn't say an excuse, but was a reason not to make that big step, which is costly for everybody, because if you get it wrong, you're there for a number of years. If you know China, you know what I'm talking about. But I've still felt that the repos have been lagging apart. But if you don't get that repo market, then you are closing yourself a little bit. Do you want to maybe comment on that, Janal?
I mean, what's interesting about the repo side is that actually those transactions started in Saudi through the local depository in 2020, before even the market infrastructure changed and before even the SBL regulations were really adopted and used. So it started and we started seeing a lot of repo activity between local institutions, maybe one or two regional institutions coming in as part of that. And then in the past, I'd say year and a half, we've seen a huge influx of internationals. So internationals have come in to the local currency debt market and started becoming active in double wad repo with local institutions. And that's also driven a lot more liquidity and probably competitiveness and activity in that market. But in general, it's still very opaque. There isn't a centralized, place to see repo activity. There's some platforms that are trying to compete for that. Even in terms of how they're cleared, each one is different. So there's bilateral, and then there's some that are cleared by the CCP in Saudi, by Muqassa. Not everyone uses one or the other. And to add to the confusion, you also have ICSDs like Euroclear and Clearstream that also offer a solution for SAR cleared repo. So you don't have one place where it's all aggregating and you can see it in one place, and that's one of the challenges.
Do you think a local regulator will put that in place so they have a single point of report?
There was a draft regulation about an ATS coming to the Saudi market for fixed income securities only, and it has been approved. And from what we know, that ATS will come in to the market maybe in the next 18 months, 12 months. And we think once you have that ATS, it might also drive a related repo platform to allow it to be sort of linked together and provide that visibility in one place.
What's the size of the fixed income market in comparison?
I mean, in terms of the outstanding, you probably have between 5 and 600 million Saudi riyals in local currency. So you're talking about around 150 to 170 billion dollars. So it's not a small market at all.
Do you believe that the equity repo can pick up? In fact, I fully agree with you that there is a pickup on the fixed income repo, etc. Is there a need or a room for financial institutions to use equity
I mean, there's some talk about this, and I think one of the challenges we have right now in this SBL regulations as they stand in Saudi is that I can't use Saudi assets as collateral in tri-party or in these kinds of transactions unless it's linked with a local Saudi equity trade. So I can't use SABIC shares as collateral for something that's outside of a trade booked in the CST. And that's one of the key factors we've told the depository needs to change, because you don't want Saudi shares to just be used to lend. You also want them to be used as collateral for global transactions or other transactions.
But just to your point though, Elie, the equity repo globally is significantly less than the fixed income anyway, right? So I think that's, it's globally something that people are trying to do more of. But the fixed income numbers are far more dominant and a lot higher anyway.
Which is honestly I can understand, right? Because it's much cheaper to use fixed income for cash repo rather than using equity, which is more expensive. And the equity can be used as a last resource for equity repo transaction. In fact,
there's better use for equities. Usually that's the
way,
way we look at it.
No, that's why the equity lending is picking up, because it's generate higher return, higher yield, etc. and then fixed income lending. While the opposite is true for the fixed income repo. In fact, it's cheaper to put in place compared to the equity. Is my understanding of that.
But maybe we'll see the same pragmatic approach to fixed income repo as we see in securities financing. I mean, there's a number of elephants in the room when it comes to repo generally, regulatory legals being one, but in this part of the world, it's been a bit of a chicken and egg, not being able to sort out conventional Islamic, but in reality you could have the two, whether the ATS solution, which I look at closely as a Dimitri.
Just to add to the point Jalal was making, I think from an education perspective, institutions in the region have been doing repo for a long time, right? International repo, if you like, not domestic repo. So it's a transaction that people are comfortable with and they know for most part, which isn't necessarily the same with securities lending. Now, I can contradict myself slightly here and say that actually, if you look at the international securities lending business that's done out of the region, some of those beneficial owners have been lending securities longer than most people in the world, over a quarter of a century probably. And I think that it's important to just look at those two things separately. We're discussing a lot of domestic securities lending here, but actually securities lending isn't new to the region. There are institutions in the region, as I said, who've been lending for over 25 years. And I think that's true of repo as well. Repo, if you go and speak to any corporate treasury in any of the large companies that are based here and that have been created here, formed here, they have been doing repo for a long time. So really, from an education perspective, they're all very familiar with repo. It's really just getting the plumbing and the mechanics and the regulations in place, as Jalal said, to enable that repo activity to grow from a local domestic perspective.
Darren, from a technology perspective, considering some of the investments that need to be done in the pre-trade setup there, some of what you have to offer is obviously a bit of a pity not to have the repo market up there.
Yeah, like whether it's repo or securities lending trades, there's upfront work that everyone needs to do to integrate into the pipes and plumbing. There's probably two technology things to talk about, and we'll maybe talk about the other side of technology later, which is around, let's call it modern technology, AI, data lakes, using that data for decision making, workflow processing. The advantage of where the GCC countries are now is they're going to benefit from the pipes and plumbing that's already in place from the different vendors, and be able to immediately take advantage of some of the new modern technologies. So the biggest probably challenge at the moment that we see is around data residency rules within countries. So being able to deploy, so go back a step. So what do I mean by that? The data should live in Dubai, for example, where we are today. So banks are saying we don't want our data to leave the country. It needs to stay here. So for firms like Broadridge, who have historically offered data centers in the US, Europe, and Asia, we are now saying, okay, well, how are we going to do this? How do we service the client's demand while keeping the data in country? The easy answer is AWS. So we are an Amazon partner. We deploy our platform on AWS. We can do that here. In Saudi, we can't do that yet because AWS isn't available until 2026 for the services that we need to be able to run. So there's an interim period where we're servicing clients with physical kit in their offices. And then in a couple of years' time, we'll be able to take that ownership back and provide it on a mutualized basis. Mutualized means cheaper. That's what it comes down to. We should be able to run things more efficiently across multiple clients than banks can do on their own. So as we go into each country, we're doing an assessment of what can we do in that country, what can we offer, slightly different per country. But I think by the time we get to 26, maybe end of 25, we'll be able to offer something pretty standard into each place, which will allow us to roll it out much quicker.
Yeah. Let's take that thought, because obviously from a technology perspective, I'm pretty sure everybody around this table has at the forefront of their daily opportunities, challenges, the technology side of things. From one side, we have this will of pushing this market forward and blowing it up to its full potential. And the other side, we also have this availability of learning, not making other people's mistakes, but also benefiting from all the new acronyms and the new possibilities and the new systems that make things cheaper, faster. And are you feeling this? And I'll start with you, Sarah. Are you feeling that this is the time where you can now benefit from all these fantastic tools that are being developed over years, from AI to...
Definitely. I can give you an example in Saudi Arabia. So the post-trade technology, for example, the changes that have been made, the introduction of CCP, the Muqasa, so it helped in effectively management of the clearing, as well as mitigating the market risk. There was also an introduction of the transaction processing rules. So to be in line with the global practices. So the introduction of SWIFT messages, the ISO messages, the introduction of the Saudi Tadawul group, to have a local alignment with the global standard as well. So yes, definitely there is an opportunity.
So I think one of the challenges in general we've had in Saudi is that the market infrastructure has changed across so many parts of our business a lot over the past 4 years. So it's not just some of the ISO message implementations that Sarah talked about, but we also have similar changes in the fix, in enabling new types of orders, in enabling new IPO processes. So all of these are putting a huge load on our infrastructure and technology teams to try to keep up with those changes. So that's why maybe it takes us longer to come and implement some of these new capabilities, even though the market infrastructure and regulation has been there a while.
For as much as we want to go beyond domestic solutions, which I think you three gentlemen have pointed out, how can you help? How can the banks, the international banks, go beyond cross-border trades and actually help from pointing out what's good for the market and what isn't good for the market?
Circle back on the technology point a little bit, because Darren mentioned the region benefits from the pipes and plumbing that's already been created before, but they also are then impacted by the challenges that are faced everywhere else. And I think a global challenge we see with technology is, and 2 points I'd like to point out around interoperability. So we are seeing more and more fintechs come to market at the moment, and what that's doing is creating potential silos in the market, and that's the global agency lending market and securities lending market, not particularly region based. But with that, there are challenges, and I think a demand from the agent lender side is just interoperability would be extremely helpful, because without that, the market's not efficient, and that will have a knock-on impact onto the region. And then a little bit around what Darren mentioned around data. I think cybersecurity is a huge topic for us as a global bank at the moment, and that will impact the region as it grows and what technology solutions they use to build upon, as well as the fact that you have, all this future technology that Darren mentioned at their disposal as the market is in its early stages, and it can probably adopt a little bit easier than something that's been in place for a long, long time. So there are a couple of points from a technology perspective, but beyond that, how global businesses can help. I mean, education is one that's been mentioned a few times. Use our knowledge. We've been doing this for a long time. We have successful setups in multi-jurisdictions. So utilising that, and that's something that we're doing at BNP, is we're looking to work with local participants to help build these models. So that's something that we think where we can help develop the markets further.
If I can grab one point that I think is important to mention, because this is something that global custodians also drive, but local custodians need to participate in, is enabling asset managers to properly reflect assets on loan. So if you look at generally who are the most frequent lenders, a lot of it is long only, index-based and benchmarked asset managers. We have a lot of those in Saudi, and us, Riyadh Capital, other investment managers have huge pools of capital that are allocated to these products. Most of those products aren't able to lend now because the local sub-custodian or local middle office or administrator doesn't have ability for them to reflect shares on loan versus not in custody. And that impacts NAVs and valuations. So this is something that we think, is a key market development that needs to take place. And it's something that even global custodians need to drive with their local subs to make sure that they have the same capability they have in developed markets in reflecting those assets properly.
But there's technology solutions that are existing. There's two people here with books and records platforms that can help do that. But I think the difficulty is perhaps more that the technology in some of the institutions, and please correct me if I'm wrong, has evolved over time. Sometimes it's in-house developed as well. And that's where that interoperability is really important. The ability from technology providers to make sure that whatever we're building is able to connect to the various different platforms out there, not just from a books and records perspective, but from a trading perspective. I think a hot topic at ISLA this year, as you were both there, was interoperability. There was a quite significant amount of time spent talking about interoperability. So again, I think it's important that the technology providers are able to offer that connectivity to whichever platforms and systems that you guys have. But it's also difficult, I'd imagine, to extract those systems and put something new in.
No one wants to do an extra manual process.
Nobody wants
if
to.
you don't have to.
You know, and that's not just in the region. I think that's globally, right? It's much easier to get internal budget to spend if there's a regulatory driver rather than trying to improve or be more efficient. It's a lot harder to make that business case internally, I think.
Just going back to your point about budgets, the two places budgets are spent is cyber and regulation. Like, that's the two key drivers. So if within our firm, cyber, then other stuff. That's the way we're currently looking at it. We are investing a lot in data protection and cyber security and solutions that, in the event they are hacked, that they can come back up quickly and we're not out of business for our clients. It's key within our books and records platforms that we can do that. It's quite an interesting time for us as well because of DORA, so the European Regulation Digital Operations Resiliency Act, which is mandating these things are provided along with some other things. That's probably setting the benchmark for what standard will look like in 12 months' time. So if you don't provide standard in 12 months, you don't really sell, because people will only buy what the regulator is telling you need to buy. So there's a lot of investment within the banks themselves. So BNP, HSBC, JP Morgan will all be investing a lot of money in cyber resiliency to meet their DORA requirements. But that's going to benefit them for many years forward, because it becomes a tick in the box for them. And you know, that's what we are trying to get to within Broadridge. Is it's table stakes in 12 months' time. You must have these things available to you. So a lot of time, money and budget is being spent towards it, just to make sure you're setting yourself up for the next 5 years.